What's going on? Alex here, and today I'm answering your tax questions from Reddit. And today's question has to do with the payroll tax deferral that was put forth by an executive order that's applicable to tax years 2020 and 2021. So let's take a look. This question comes from NeoWick5967, and it goes as follows. Is it the employer who elects whether or not to participate in this program? If there is participation, do the funds that are deferred have to be added to the employee's paycheck, meaning each employee would receive additional funds? And 3, if participation is elected, is it up to the employer or the employee to determine the appropriate pay schedule? All right, so what are we even talking about? So this payroll tax deferral hasn't gotten too much publicity. I haven't seen it reported in all that many news outlets, but I can tell you that a lot of my business owner clients are calling and asking about this program and whether they should participate and how it would work out. What are the details? All these are great questions, but unfortunately, there's not enough guidance at the moment. Fortunately, Forbes has a good article on this, and the title here is a little bit clickbaity, but it is what it is. Your paychecks may be slashed up to $2,232 in early 2021. Kind of an alarmist headline, but let's take a look. One of the executive actions that President Trump signed in early August took effect September 1st. It temporarily suspends the requirement for employers to collect Social Security payroll taxes on behalf of their employees until the end of the year. The executive memorandum that Trump signed limits the payroll tax holiday to workers earning less than $4,000 on a bi-weekly basis, so every 2 weeks, which could translate to a yearly salary of $104,000. It is also an optional incentive for employers who can choose to implement it or simply ignore it. Now, what's the deal? When you work as an employee, your employer is required to withhold your portion of Social Security taxes. And that is 6.2% of your wages up to certain limits. It gets a little technical, but that's the basic idea. So when you look at your W-2, you see the Social Security wages and you see the Social Security taxes taken out. That's what we're talking about here. And essentially, this executive action allows employers to not withhold those amounts from the employees. So essentially, employees would receive more in their paychecks from September 1st till the end of the year, December 31st, 2020. It sounds great on its face, but then once 2021 comes around, the idea is that the employers now need to withhold those amounts that were not withheld during 2020, during this few-month period from September 1st till the end of the year, thereby decreasing employees' paychecks. So this isn't payroll tax forgiveness, it's payroll tax deferral. In other words, kicking the can down the road. I've read this thing backwards and forwards. I got to tell you guys, this one's a head-scratcher to me. Because there are not only issues from the employee side, there are issues from the employer side. But before we get into that, let's read a little more. All right, so here's how the payroll tax holiday will work. And by the way, this article is very good in terms of the detail, despite the alarmist headline. So take it for what it's worth. Now, wages up to $137,700, and this value changes every year, so don't get too attached to it, have a 6.2% Social Security tax assessed on employees. Employers are also taxed an equivalent percentage. So this payroll tax deferral is not applicable to the employer portion, only the employee portion, okay? The guidance that the IRS issued allows but does not require employers to defer the employee share of Social Security taxes for those earning less than $4,000. If you work at the employer who opts in to the deferral and are eligible, you won't have 6.2% taken out of your paycheck for up to 4 months. In other words, your take-home pay temporarily goes up till the end of 2020. So there are a few examples here. I'm going to skip this. Let's jump to 2021. Remember, the payroll tax holiday is merely a deferral of the taxes. Simply put, this means that you'll still have to pay the money back per recent guidance issued by the IRS. So it doesn't go away. It just gets pushed forward. The thing is that employers are on the hook for these amounts. Now, this is a different Forbes article here. Let's just take a look at this one. It says here that what became clear from the notice that came out, providing more details about this whole thing, was that employers were indeed responsible for withholding and paying back any deferred taxes, putting them at significant risk if they cannot collect those funds from employees. The question is, if you have an employee and you implement this, and they're working from September 1st till the end of 2020, on January 1st, 2021, that employee quits. If the employer is on the hook for those taxes that they didn't take away from the employee, how are they going to recover those funds? Right? How's that going to work? Are you going to sue that employee, show up at their house? How's that going to work? And if the employer is responsible for what they withheld or didn't withhold from the employee, that would incentivize a lot of employers not to even bother with this whole thing, because let's not forget that it's optional. So from beginning to end, this thing really doesn't make any sense. Just quitting your job on January 1st may have a Christmas gift built into it, in that that employer now cannot recover the amounts they didn't withhold in the first place. And that's where this article comes in. Once you hit 2021, the employer of the individual making $104,000 a year would need to claw back $2,232 from that employee over the course of January 1st, 2021 to April 31st, 2021. This will be on top of collecting payroll taxes on that individual's new 2021 earnings. Employers could do this in several ways. They could ask the employee for a lump sum payment of $2,232, potentially overwhelming amount whose gross paycheck is $4,000 every 2 weeks. Alternatively, employers could simply spread the amount over a 4-month period and deduct an extra $248 from each paycheck. Any way you cut it, this individual would see their total take-home pay slashed by that amount in early 2021. So overall, this doesn't make much sense to me. It seems like there are many more risks and downsides and twists and turns involved in all of this mess than an actual benefit, both for the employee and the employer. If you tell me I could save $200 today, but I have to pay you the $200 tomorrow, and there's all these different rules and complications attached to it, I'd rather just pay you the $200 today and forget about it, right? So that is why I believe a lot of employers are going to completely ignore this whole thing. And it seems like the only major employer that has signed on to this so far is the federal government. But if you're a private company, you have any number of employees, even if you have one employee, think seriously about whether you want to implement this. And before you go through with it, consult with your tax advisors, consult with your legal advisors, and make sure that it makes sense. Because maybe I'm not smart enough to understand this and wrap my head around it, but to me, it seems like a losing bet any way you slice it. I would stay away from this as far as possible and not get tangled in trying to not withhold amounts and then get those amounts, claw them back from employees. It's a mess. But that's what it is. It's out there, and I wanted to provide clarification because I am getting a lot of questions about this particular executive action. So, going back to the questions, let's address these. Is it the employer who elects whether or not to participate in this program? Yes, it's based on the discretion of each individual employer. It's not a requirement. It's something they can choose to do, according to the information that's out now. Second, if there is participation, do the funds that are deferred have to be added to the employee's paycheck, meaning each employee would receive additional funds? It's not that they're being added necessarily, it's that they're not being taken away. So in a way, they're being added, but that's really the functioning of how it works, is that you're not going to be taking it out of their paychecks, which would increase their take-home pay. So if participation is elected, is it up to the employer and employee to determine the appropriate payback schedule? It sounds like they can either do it up front or do it ratably over those first few months of 2021. The guidance that's been released so far isn't exactly clear on how all of this is going to play out, and the fact that it was so last minute doesn't help the situation. But hopefully, overall, NeoWick 5967, this adds a little bit of insight and color into this crazy situation. Maybe somebody can figure out and leave in the comments below how this can be beneficial for either the employee or the employer, but right now, I can't seem to think of how that's possible. With that, if this video added value for you, leave a comment, hit that like button, subscribe to the channel, and hit that bell icon to be notified of future videos, because you know there will be more. And I'm getting so many good comments now that I'm starting to answer the questions in the videos themselves. So you may become famous in front of my almost 800 subscribers if you leave a comment below with your questions. With that, hopefully this was helpful. Thanks for watching.